Good morning, traders. It's 8:02 a.m. Chicago time on Monday, the 4th of January, 2016. Happy New Year. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Quick rundown of the key drivers overnight. I'm sure many of you have heard that China's market manufacturing PMI fell to 48.2 in December. The reading was down from the previous 48.6 and shy of 49.0 that economists were expecting. China's manufacturing sector has been in a correction for 10 consecutive months now. It is now at its lowest since September. The Chinese yuan fell 0.7%, which is the weakest it's been since 2011. China's Shanghai Composite dropped 7%, technically a crash of some sort. 7% overnight and triggered circuit breakers for the session. It closed the session on a halt. Disappointing manufacturing data is being blamed. As mentioned, the market was curbed for 30 minutes when it hit its 5% down limit, but continued lower on the reopen. Just was unable to recover at all. To follow suit, Japan's Nikkei finished down 3%. Saudi Arabia and Iran have broken off diplomatic ties and have withdrawn or are withdrawing their representatives. Iranian protesters attacked Saudi's embassy in Tehran after Saudi Arabia executed a popular Shiite cleric over the weekend. This is relevant to us because it raises geopolitical risk. Remember, the market does not respond well to risk and the unknown, and both countries are oil producers. These moves resulted in a run-up in oil, and that run-up was basically dissolved on the China news. As far as what's ahead on the calendar today, at 8:45 Central, 9:45 Eastern, we have U.S. manufacturing PMI final, expecting 51.1. At 9 o'clock Central, 10 Eastern, we're expecting construction spending month on month for November, 0.7%. And also at 9 o'clock Central, 10 Eastern, we're looking for U.S. ISM manufacturing, expecting 49.0. ISM prices paid, expecting 36.0. Those are the releases today. This afternoon, as far as speakers, this afternoon we're looking for Fed's Williams comments on policy implementation at about 4:30 Central, 5:30 Eastern, after the market closes. Let's have a look at what we've done here over the last few days. This is a 120 minute chart, 2 hours per bar, and it shows, and each one of these profiles here shows what has happened on each given day. I actually need to scrub this data to get rid of some of these days here. I did a full download and it brought them back in, but this is the pattern that the market has followed to finish off the year. We gapped up on December 15th and we pushed back up towards our target of 275, which was our key balance area. This was a huge area. It's the former 2080 in the December contract, now 2072.75. The idea is once we gapped up, we were looking for 72.75 on a test. It got to 29.50, and then the market rotated down, balanced for a day, and then started to move up again towards that target before I left for the holidays. The ES ultimately got to that target on Tuesday and went through it by about 9 ticks, 74.50, and has rotated down, which is what's expected. We expect it to test, rotate down. If it has strength, pull down to 49 or so, and then turn back up, push through 2072.75, then snake around it. The alternative is what has happened, which is to push against it, find the sellers, find a supply in that point of control area, and rotate back down, and that's exactly what happened here. The overall um, the overall retracement has pushed into 50% on the last day of the year. Um, Last trading day of the year has pulled back to 50% of this move up, and the market looked like it was stabilizing into the close. The market did not have its Santa Claus rally like everybody was expecting. Um, the probabilities favored a run up into the end of the year. And what it did on the last day of the year was a very classic auction stuff. It gapped down. It traded out of range for a while. We had a fairly tight, relatively tight initial balance. It broke the initial balance down, tested the next significant area down, which was this 3950 point of control, naked point of control, and then it bounced up and broke the other side, closing two gaps and testing the prior day's Wednesday's low. Tried to get back into the range and close the gap up there, which was at 55, got to 54.75, and then rotated back to the mid. Had a 5-point rotation up. This is a classic setup right here. IB high, and then add at the mid in this scenario for a continuation higher. It was unable to do that. It did provide five points of relief there before it broke through the mid, and then it ended up breaking the IB low again to finish on the downside of this neutral day. This is technically neutral extreme to the downside, which portends or predicts a continuation down and a test below the 2030 and a quarter. Especially in this situation where we don't often go neutral, meaning break the IB low, break the IB high, and then go through the IB low and close below the IB low. That is fairly rare. Usually we break one side of the initial balance, break the other side, end up in the middle, or end up on the side that we broke last, in this case up. And the market just moved all the way back down. A lot of covering. It looks like a lot of covering into the new year. And those guys are winners right now. So as I said, the expectation is for it to retest or break below the 2030 at some point in the session. As you know, we did a lot more than that. We actually dropped to 1995 on the overnight. So let's look at the overnight session here. Pretty ugly trading for anybody who's bullish. So there's our 2030 quarter right there from the last trading day of the year. The market trades sideways on the open and then starts selling off, and then as the Asian market opens, it just continues to sell off. It went to 1995. We're trading near there currently. The market recovered back into the low volume node here. On this profile, the shape of the profile is a B shape. Imagine this, if it was on this side, it would look like a B. B shape. This is long liquidation. The market is stabilizing. There's a huge amount of difference between the last close at 35.75 and where we are now. About 37 points difference, 36, 37 points difference. And that's fairly significant. Statistically, when I pull this up on the gap chart, the probability of the gap filling is pretty much negligible. And it creates a situation where it's we expect the market, when it opens with a gap down, we expect it to be responsive to attempt to auction back to where value was, which was up here. But that size gap tells us, especially since the gap is not too far from the low, just 5 points, it tells us that the market's really significantly weak, and the short side is probably the side that we need to push today. So that's what happened overnight. A lot to work with as far as market structure above, and going into the session, given that it's not able to come off of its lows. There's not been a real pusher. I mean, it's bounced up 8 points from the low, 9 points from the low. That's it. For a move this big, that's pretty weak. So overall, it looks like we're heading into a selling session. Let's switch this back to 15 minutes here. Give it a second to recompute. Got a lot of studies on this chart. So here's where we are now. This is live, 1998. Here's where we closed. Here's the low of the prior session. The expectation coming into today, it's likely to try to sell off a little bit before it gets responsive and pushes back up. The expectation is it cannot push up very much. Chances are if it does push up, it'll get somewhere around, let's see, 217 points or so before it's confronted with sellers and more panic. And the expectation is for it to start testing below our huge balance zone. So let's look at that balance zone for a second. Actually, I shouldn't have switched here. But let's look at that balance zone for a second. This balance zone goes all the way back to October 23rd of 2015. And we've been stuck in this balance zone for quite some time. We've used this chart, if you recall, this red chart. We've used this chart quite a bit. So when we look at the clean chart here, we see that the 2026, 2025 has been instrumental. We've talked about this level quite a few times. It is the big divider between what is up top up here, the distribution up top, and what the market considers value below. And currently we are trading at 1999 down here. So the expectation is that if it does have a rotation up, that it's probably going to test up into this area here. If not, 2020 will be the extreme high on a retest higher on a gap up or on a responsive buying up. The low of this balance zone is 83.25 adjusted for a rollover. And it looks like we're likely to take that out and start heading into the lower levels we have down here. So when we look at the lower levels below us, 1980.25, 76.50 is a gap, and then 74.50. And when we pull in more profiles from the past, so we're pushing into the September high here, 2004. We're stuck in this below this 2004 in September. And when we look at what we have down below, we have this big balance area down below. Let me draw a profile around it. So we start to look at 1915 or so for the next key target below from where we are. That's quite a bit of distance away, but it seems like the market is not able to push and take out that high any longer. It looks like it's a selling type of January. That's how things are shaping up. This morning, just to bring things back into the context of the now, this morning I am just basically going to sit out for at least the first 15 minutes, half hour. I want to see what what quality participants are coming in. Are they able to rotate it back up to this 2013 area or so? 2012, 2013 area. And if they do, are there sellers that are stepping in to liquidate their positions, or does it continue higher and attempt to start working its way back up into the 20-30 quarter retest of the prior range that we were in? So I'm just sitting out. It's very difficult to predict what it's likely to do because there's a lot of incentive here for both sides to step in. Given that we're in a large balance zone and lower distribution, there's incentive for buyers to come in, bulls to come in and say, wow, this is cheap. Let's grab it before it gets back up to 2072.75. But there's also incentive for sellers to step in as buyers come in and look at their positions and see that they may be getting underwater and things are getting a little bit too risky. And so the higher time frame participants or the OTF may liquidate. And if they do, they're likely to drive it through the 83 quarter, and we start to look for 74.50 and so on below. That's how things are shaping up right now. I'm gonna do tomorrow will be a longer trader bite. I'm going to do a general overview of the year. The year finished down in 2015. We have a spinning top kind of formation where the market opened and it just basically attempted higher, attempted lower. You look at the monthly here. This is a monthly chart from the low of 2009 on the SPX, and you can see the monthly is very green. It's fairly green, and it's getting quite volatile over the last 6 months or so in the range that we were in recently. The market still was unable to push this 2134 high before the end of the year. The expectation was for it to pull back and push through this high to break this in December, to push through and take this out, but it was unable to do so, and we're now trading somewhere down here, and we're stuck in this pattern again. This goes back way back into May or April of last year that we've been in this kind of more volatile back and forth type of trade. On the yearly, when I switch this to a yearly, you'll see that we have basically this formation here. Very strong 2013, very wide range in 2013. We break through this big area, and then we start to balance in 2014, and we continue to balance in 2015. But 2015 versus 2014 is a lot weaker than 2014 versus 2013. This is a big picture, but I'll cover more of this tomorrow. As we look at the longer term profiles and see what the market's trying to tell us as the auction progresses. I'll leave you with that. This morning, it's wise to just kick back a little bit, start the year on a strong hand, just to be picky, let the market tell us what it wants to do. Pick your spots, and let's see how this huge gap resolves itself today. At the end of today, make sure you mark the gap zone and you're aware of where it is for future trading. Take care, and I'll catch you tomorrow. Again, Happy New Year.